Good morning, guys. Welcome. Nice to have you here. Welcome to the show. Today is Wednesday, May 2nd, 2018, and let's get the show started. Let's start the charts right here. First thing, we're going to narrow the charts in, and we're going to look at silver. The silver price is up a little bit today, 25 cents as we speak. The thing about it is this silver price that has been smashed, the smash appears to be more of a strength in the dollar smash. This is what it's looking like to me, a strength in the dollar smash. The dollar has moved up sharply. And I'm going to tell you, I wasn't expecting this little rally in the dollar right now. I said that yesterday on my show. I tend to think it's some sort of a little short squeeze or something in the dollar, and it's only temporary. I think that I don't think the dollar is going to go back down to 89, but I think it's going to drop off from here, from around the what's the dollar running right now? 92.44. So I think the dollar is actually going to drop back down to somewhere around probably 90 or 91 in the next coming little while. And so I think we're going to see happen is I think we're going to see the silver price take a bounce back up more towards 17 bucks in the next little while as the dollar starts to lose a little bit of strength when this short squeeze ends. Here's the thing. When we move below 20,000 on the, that's when we're going to see a little bit of a bound in the dollar, something similar to what we just saw, maybe a little bit more profound even. But it's going to be caused by something entirely different. It's going to be caused by people running to safety. They're going to run to safety in three asset classes: dollar, gold, and silver. And they're going to dump everything else. And that's what I was saying yesterday. But now let's take a look at the Dow Jones. It should be going now. It should be up and running. And we're down 26 points. I tend to think that today is probably not going to completely be a down day. We might see a rally toward the end of the day today, a little bit of a rally, but not much. And the reason why I tend to think that is I've been carefully watching the bond market. We're going to get there to the bond market. I mean, okay, we're still on the stock market today. But I'm expecting probably in the next 2 or 3 weeks, I'm expecting this stock market to drop down to 23,000 and then rebound back to maybe, I don't know, halfway back to where it is now, probably 23,007 or 23,006 in its slow decline. This is a slow decline of the stock market. Only reason why the stock market has been doing as good as what it has been is money injections, liquidity injections into the market, through things like stock buybacks and things like that. Okay, so now let's take a look at cryptocurrency. Bitcoin is doing pretty good, and I expect it to do good until the stock market rolls down to 20,000. Which could be later in the year. I mean, it might be later this fall even, because the Federal Reserve, first off, they're doing some cheating that's slowing things down a little bit, which is basically kicking the can down the road. And at the same time, they're very slowly increasing their quantitative tightening. And so because they're so slowly increasing it, this year, 10 billion every 3 months are increasing it at. The effect is cumulative. And what I mean by that is every time they increase it 10 billion, even though it's slow, that effect is cumulative. And so the net effect gets larger and larger. And so toward the end of the year, the net effect, the cumulative effect is going to be much greater than it is now. And so it's going to be a much greater likelihood that we're going to actually have that crash because of the cumulative effect of what they're doing. Looking at looking at Bitstamp, cryptocurrency is actually doing pretty good. And I expect it to do pretty good. And my target here was 10,000. And we're at 9,062. I consider that to be good, before it's going to crash. And so I think it could actually make it up or actually exceed that target. I said it could exceed that target all the way up to 11,000 before the crash. Uh, and that's what I'm expecting because as the stock market rolls over even further, they see cryptocurrency. I mean, an awful lot of people see it now as a safe haven asset, and they think HODL. And the thing is it's a speculative investment. And so, like all speculative investments, I mean, you could have a tremendous price bust up, where the price drops amazingly low. And it could astound everybody how low the price could actually drop in cryptocurrencies. And really, you could lose an awful lot of money if that happens. Uh, but there's so much money to be gained ultimately because cryptocurrencies is going to move from a speculative investment where it is right now. It's going to change. It's going to become a safe haven asset. Now, listen to what I just said. It's going to become a safe haven asset over the next maybe 3 to 5 years. And so, I mean, you could, if you wanted to, really, you could invest in this, and you could HODL it, I mean, with an absolute determination to HODL it, right through the crash to the other side where it rebounds back up, and it's just like you never lost anything if you don't sell. So right now, if you're packing, say you're packing one of these cryptocurrencies and you're holding it, you're HODLing it, if you just sit on it right through the crash that's coming and wait, eventually it'll rebound up higher than it ever was. And it'll be just like the crash never ever happened. But also on the other side of this, look at the buying opportunity that some smuck is going to get from the crash. If he hits it right at the bottom and he buys in, look at what he's going to make, the profit he's going to make. He's going to do tremendous on the other side of this, if he knows when to buy in. Okay, so cryptocurrency market capitalizations today. 36.4% Bitcoin dominance. That's down quite low, really, today. $425 billion market cap. Everything's up today. Bitcoin Cash is really up big. These are the big winners. Big winner, IOTA's a big winner. EOS is a pretty good, solid winner. Losers, there's not really any losers, but some of the more losers is Litecoin. Litecoin didn't do that well in this. It's only up 2% at 148 bucks. Ethereum didn't do that well in it. It's 674 bucks. Ripple didn't do very well. Tron didn't do very well, but Tron has done so well lately that right now, because it didn't do very well, because it's been done so well lately overall, So anyway, moving on to bonds and rates here. The U.S. 10-year is at 1.97. I think it's actually moving up a little bit right now as we speak, because when I first opened the thing, I think it was 2.96 or something like that, and it's 2.97 right now. So, but it's still down overall today, but only marginally down. I think in the end of the day, it's going to end up the rates are going to move up toward the end of the day today, and it's staying under 3. I suspect that they could be doing a little bit more hanky-panky and buying bonds, or somebody's buying bonds, because these bond rates were up over 3% on the U.S. 10-year. Let's take a look at the chart here. Okay, and let's go back, and we're going to see that, okay, so let's go back to, say, 1 month. Let's try the 1 month chart here. Okay, yeah, we see these spike in yields here, and we see a drop off right here. Again a spike and then a drop off. Somebody's purchasing. and that's where we get these drop in yields. So the purchasing, the spike ended on the 25th of last month, and there was a drop off, and the drop off ended on the 30th. And now it's a little bit of a bounce back, but it's kind of going along kind of level. So I'm expecting it to bounce up now at this point. I'm expecting it to start to rise again, back over 3%. We're on our way, ultimately, to 3.25. And when they're going to increase that extra $10 billion, let's see, it was January, February, March, April, May, June. So it's June, the end of June. And so the end of June, the 1st of July, that's when they're going to increase it. And so if we're not to 3.25%, as soon as that passes and they increase it $10 billion more, the cumulative effect is going to, at the start of July, should lift us up to that 3.25% before the next 3 months passes by past that. So July, August, September, October, along in there. And we should be getting up to the 3.25%, and we should be locked and loaded by then, once we hit 3.25% for this crash. So it's starting to shape up. In my mind, it's starting to look like possibly as late as this fall before the crash actually gets here. Because one of the things that's been slowing it down is I believe that they've been actually kicking the can down the road. They've been actually taking 2 steps forward and 1 step back each time. Instead of walking like a normal person walks, where they walk step, 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 what they're doing is they're taking 2 steps forward, 1 step back, 2 steps forward, 1 step back. And I think this is what the Fed's been doing, and this has been slowing things down. It's been taking them longer to get there. But ultimately, they will get there. They will get to 3.25%. Let's take a look at the U.S. dollar index today. We're going to take a look at overall 1-month chart here on it. And we can see that this was this increase. It went from 89.42 on the 16th of last month, all the way up to a peak of 2.47, and right now it's at 2.45. I'll tell you quite honestly, I think that there's a very strong possibility that this might actually start to decline over the next few days and go back down to like 91, you know. And if it does, we should see the strength in the silver price again. We should see the silver price go back up to around 1670 or something like that, or 1680. And also gold. We should see. Now, I'm going to switch over here to gold. Where is it here? Live charts, gold. Switching over to the gold chart. Okay, here, live gold price. Gold's down this morning a little bit, but I'm expecting we should see the price of gold going back up to like 13.25 or 13.30 or something like that, rather than it's almost down to the 1200s, you know, which is ridiculous. So anyway, let's just take a look here at a channel that I go to sometimes to take a look and see what's going on and stuff, you know, and it's a very good channel called the Money GPS, you know. And he had a story this morning about stock buybacks, and I was reading it, and I found it very interesting. Apple, how much Apple has put back into their stock buybacks. It says Apple's bought $23.5 billion of its own stock just in the March quarter. $23.5 billion. They're buying their own stocks, you know. And this is one of the things that's keeping the stock market up, is stock buybacks. It's absolutely ridiculous. Okay, so listen. Thank you guys for tuning in to the market report for this Wednesday, and stay tuned. We'll have another market report tomorrow morning. Bye-bye for now.